Ladies and gentlemen of Germany, it's me, NYSEinstein from the floor of the New York Stock Exchange. It had to happen eventually, and it did. How long it'll last, I don't know. Market is red, virtually 90% red across the board. Volume 900 million, 753 million of that were down stocks. 150 million were up. Market closed down. Dow Jones Industrial Average down 362 points. A sell-off that commenced yesterday at 345, down $1.50 then, down another 360 today, down 500 points, but still, we're still above 26,000. Are we going to get back there? It's very possible. Coming to the end of the month of January. What causes the beginning of this sell-off? Number of possibilities. Today's sell-off, I would say 70% of which was caused by this merger of JP Morgan, Berkshire Hathaway, and Amazon, creating a new healthcare company that would be more efficient, more inexpensive, and putting major restrictions on United Healthcare, on Cigna, on Aetna, on the whole industry. UNH, United Healthcare, one of the heaviest weighted stocks in the Dow Jones Industrial Average, down $16 at one point, probably contributed to 200 points of the Dow sell-off. The rest of the sector itself dragged down on the industry in a huge way. Some drug companies, in fact, were also heavy weighted in that and contributed to the sell side. Once you have a market that's at all-time record highs, 26,500, and you see a final breakdown, initial breakdown, due to some significant news, though it was very sector related, you definitely have people selling. Also, another very important contributing factor to this sell-off is the fact that this market is up 2,000 plus points here in January. And when that happens, you're going to have some kind of a rebalance in people's structured financial instruments, meaning long equities, short bonds, long bonds, short equities, getting out of one into the other, rebalancing their position due to the valuation of the investments they have. They're big in equities. Stocks are up astronomically, huge percentage in January. Word is out of Goldman that there will be a sell order imbalance of up to $34.5 billion coming into the marketplace. Price started yesterday, probably continued today into tomorrow, readjusting their portfolios from equities and the bonds to whatever percentage they need to. Way over my head, I'm not that smart. But coming out of the model, out of Goldman, saying that the largest sell imbalance in recent history, going back to 1995, $34.5 billion of equity sell pressure coming into the market into tomorrow. That's probably a big factor right here. So the UNH, the healthcare problem, the sell-off in equities to revalue themselves against bigger instruments, and people who are sitting around going, you know what, if everyone's selling, I'm going to sell. Well, watch my word, Feb 1, when everyone's buying, they're all going to start buying again. That's my basic feeling with this situation. Besides that, not a lot going on. Sell across the board. Look, we have not seen a sell day since August 17th, basically, of any kind of significance. This is the largest one since then. No one wants to be that guy who sold out before the market rallied another 5,000 points. So just keep your eyes on it. It's a day-to-time program right now, right? We are seeing some pullback, and we are seeing it headline-driven. But I don't believe it's sustained. I don't believe it's going to keep going forward. We do have Mr. Trump at the State of the Union address today. Could be the Democrats selling it to embarrass him about his market being up 7,500 points. I don't think so. Keep an eye on the market. Stick with Einstein. Inside First Off. They are the greatest. I love you. I'll see you tomorrow. We'll see how this follows through. I believe we're going to see some pressure tomorrow and a rebound on Thursday. Keep an eye on the market. I love you all. Einstein out.